Hello traders, welcome back to the channel. Today we are going to look at a trade in Amazon. First, looking at the chart, you can see Amazon is neutral on our DK bar color indicator. This indicates it is not currently in a strong up or down trend. Price action is sitting right around its moving averages, which should reduce volatility as some are acting as support and others resistance. The 200-day simple moving average is the key support level down at 115. The lower limit of our DK trend channel is 123 and the upper limit of the channel is currently falling, though the previous top was at 140. Because of the current neutral nature of Amazon, we are going to place a neutral trade. We will capitalize on the fact that implied volatility, IVR, is currently still high. The trade is betting that implied volatility will fall and premium will flow out of these options as time goes by. To trade this, we are going to sell an iron condor. Current IVR of Amazon is 37, which is relatively high if our thesis is ultimately correct about a sideways market for Amazon. Shown on this chart here is Amazon's IVR, below, and price going back 3 months. Plotting the IVR, we can see it is elevated relative to itself over a longer period of time. Today is October the 15th, so we are going to look to the November 17th options expiration. We are looking to risk only $1,000, not counting our net credit received, on this trade, so each spread will be $10 wide in this iron condor. We want to enter this trade by selling the Delta 20 call and put. Looking at the options chain, that will be the 115 put and the 145 call, which are closest to a 20 delta. We can now spread off these short options with buying the 105 put and buying the 155 call. Now we have $10 wide spreads above and below where Amazon is currently trading. We can sell this whole package for $2.13. This is a positive theta trade of $5.67, meaning if the price stays the same, this trade will lose around $5 a day as time goes by. Looking at the trade analysis tab, we can see that our trade will be profitable if the price action stays in between our short strikes of 115 and 145 at expiration. But we will look to take this trade off before expiration. In a perfect scenario, price action will hold between our short strikes, and we will close the trade when there are only 21 days remaining. The passage of time alone should reduce the value of this trade so that we can remove it for a small profit. Remember, we sell to open, and we buy to close. So we want to sell the trade for a lot at the open and have it reduce in value so we can pay less to buy it to close it. Sell to open, buy to close. At 21 days until expiration, we can stay in the trade if we like, but we will buy to close this current position and sell a new iron condor in the December series. We will also do this if we want to remain in the trade at that time and IVR is still elevated. If IVR drops to less than 20, we will take the trade off either way. The other criteria to exit this trade early for a profit is if the price of the trade drops by $1. If we can pull $1 out of this trade, meaning $100 for a one lot, we will take our profits and move on to the next trade. In that scenario, we will sell to open at $2.13 and buy to close at $1.13. At any time during this trade, if we are tested on the short put or short call, we will roll up or down the untested side to receive a credit to reduce our losses. When we roll the untested side, we will roll to the new Delta 20, and if necessary we can roll our untested short option to the same strike as our tested short option. At that point in time the trade will more than likely be a loser, but we will have reduced the maximum loss by a substantial amount. The last thing I like to do when entering a trade, is to plot a reminder for me on the chart. I will place a note here on the chart denoting my short strikes. We can see our short call is at 145 and our short put is at 115. If price gets within $1 of these strikes, we will make sure to start to take defensive actions to roll up or down our untested side to mitigate losses as mentioned previously. Well, that is it for today. If you could, it would be great if you would like and subscribe. Thank you for joining. Until next time, traders.